Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso and I'm super excited to be with you today to talk about a very interesting topic related to provider relief funds and reporting on the SEFA. So if you've been following the drama related to provider relief funds, we've had a lot of twists and turns along the way. We've had changes from the 2020 compliance supplement to the 2021 compliance supplement. And in the 2021 compliance supplement, they gave us some different reporting than what we're used to. And so as a result, there's been some questions about whether we can actually even give an in relation to opinion. So the AICPA has issued a TQA, and the Q&A is in section 9160 on other reporting. And the background here is, again, when we think about this 200.514, which is the Code of Federal Regulations, right? So Title 2, Part 200 is the Uniform Guidance. Section 514 is in the audit area. And it requires the auditor to determine and report on whether the SEFA is fairly stated in all material respects in relation to the financial statements as a whole. So we treat it as supplementary information. And so for supplementary information, we typically have to be able to tie it back to the financial statements. However, unlike all of the other funds that are in there for federal funding, DHHS said it's not based on when you spend the money, like we normally do. It's basing its reporting on whether it's been reported in the DHHS portal and not based on reporting on the financial statements. And so the general rule for reporting on the schedule of expenditures of federal awards is the amount is reported when it has been expended, right? When the expenditure has been incurred during the entity's fiscal year, and then we're able to tie that back to the SEFA based on that. And as a result, we have not only our typical expenditures here, but DHHS in Provider Relief Fund also has the concept of lost revenue. And both expenditures and lost revenue are now being booked based on a timeline provided in the compliance supplement. And so for 630 year ends, only period 1 funding is being reported. That means that in the financial statements, right, they were reported significantly earlier in a different fiscal year than when we're actually going to report them in the SEFA. And the question was raised, can we do that? And so the inquiry here, paragraph 5 of AUC section 725, requires the supplementary information to relate to the same period as the financial statements for the auditor to issue an in relation to opinion on this supplementary information. So as we're going through this, right, when we're trying to report, it's supposed to be for the same period. So the question was, can an auditor report on the SEFA with provider relief funds in relation to the audit financial statements when some of the funds actually relate to the prior year, right? So unfortunately, the portal was very delayed in getting open. And so all of the 2020 money is being, or some of the 2020 money is being reported in 2021. And we expect to see some 2020 and 2021 funds reported in the 2022 SEFA. And so the question was, well, they're not the same period. And we've had this question pop up before when someone is reporting the financial statements on the accrual basis, but they report the SEFA on the cash basis. There are some TQAs out there that explain how you can, again, there are timing differences between the basis of accounting that's used for financial reporting and the basis of accounting for the audited financial statements. And so obviously GAAP requires those expenses to be when they have been incurred, and the SEFA is based on the requirements from DHHS. And so as a result, they are analogizing this to a different basis of accounting. And so they basically have said, yes, you can provide an in relation to opinion on the SEFA as long as the schedule can be reconciled back to the underlying accounting records and other records used in preparing the financial statements, or to the financial statements themselves, as long as you meet all the other requirements for AUC section 725. And so again, they're trying to make this as easy as possible because this is what the federal government wants. We're not going to make this harder than it has to be. So they said basically in the case of Provider Relief Fund, the out of period amounts that are on the SEFA were reported already in the prior year and are technically, if we want to get technical about it, are in the beginning net assets or net position of the current year financial statements. And so they feel like similar to 916027, which was the cash versus accrual basis, if the other conditions and requirements of AUC section 725 are met, then we technically can reconcile the schedule back to the underlying accounting and records and to the financial statements. And so you can provide that in relation to opinion. So hopefully, if that was a question that was you were thinking in the back of your mind, it has been answered by the AICPA. So I want to thank you guys for joining me this week. Next week is Thanksgiving, and our team has the week off, so we are not going to have a Genuine Learning blog, but we will be back the following week, which will be, I think, December. So with that, I want to wish you all a very happy Thanksgiving. We are very grateful for all of our viewers, and we look forward to seeing you in the remainder of 2021. Have a great day, guys. Bye-bye.